Hi everybody. This uh, is week 3 and this is lecture 1. Okay, last week I have explained mostly about master budget. So I hope you have done readings about the master budget. So this week we continue with this subtopic about the financial budget. Okay, here you can see there are several types of financial budgets. The first one is capital expenditure budget, cash budget, and then budgeted balance sheet. So let's see, capital expenditure budget. This kind of budget is about financial plan outlining the expected acquisition of long-term assets. I think capital expenditure budget is more like an analysis that has to be done when a business want to acquire or purchase a new non-current asset. For example, the business want to purchase an equipment or a machine, or even if the machine want to purchase a building, or even if the business want to start a new project. Okay, the second type of financial budget mentioned in this note is cash budget. Cash budget is very important. It is a detailed plan that shows all expected sources and uses of cash. So we can say that cash budget most of the time shows cash in and cash out. And if a business has a cash budget, most of the time the business can predict when the business will have surplus cash and when the business will have a deficit in cash. So when if the business has a cash budget, then the business can prepare when in the time when the business has surplus, the business can invest or keep the cash. And when the business know it will have a deficit, then the business can borrow or using its saving. We will have an example, I think, in this notes related to cash budget. And the last one is budgeted balance sheet. It represents the culmination of financial events of the coming year and shows management where the company is expected to be at the end of the year. The balance sheet shows the financial condition of a business. In accounting, when we discuss about the financial condition of a business, most of the time we look at the ratio between the ratio of total liabilities over total debt. So in accounting, if a business has low proportion of liabilities compared to asset, then we can say that the business is in a good financial condition. In other words, most of the time in accounting we say that if total liabilities of a business is 50% or lower compared to total asset, then the business is still okay. The financial condition is still good. But if the total liabilities of a business over total asset of the business is more than 50%, then In accounting, we say that the financial condition is not good. Okay, we will see the budget. And the last one is budgeted statement of cash flow. Okay, see the cash budget. Like I said earlier, cash budget is very important. If you have a business, cash is very important. Most businessmen or businesswomen knows that most of the time, cash is more important compared to profit. Sometimes a business makes profit, but the business does not have sufficient cash. The reason is the business sells something in credit. So in the revenue is high, but there is no cash. When the business has no sufficient cash, then the business will have difficulties to continue its operation. Cash is very important for a business because the business has to use cash every day to pay for something, to do this, to do that. They have to use cash. So cash is very important, and so cash management is very important. So one of the way to one of the thing that can be used to manage cash in a business is using the cash budget. So let's see the format here. You have to memorize this. So the format of the cash budget is like this. You have, first thing, you have to show the beginning cash balance and then plus cash receipts. So you will get cash available, and then you have to minus cash disbursement, and also minus minimum cash balance. Cash disbursements means cash payment. So cash available minus cash disbursement minus minimum cash balance, you will get excess or deficiency of cash. And then minus repayments plus loans plus minimum cash balance. And then you will get ending cash balance. I don't know, something wrong maybe. Minimum cash balance, there are two items. Minimum cash balance item appears 2 times in this format of cash budget. Let's see. Minimum cash balance. Okay, let's see the sample budget, then we will see why. Okay, in this sample cash budget, there are additional informations. Minimum cash balance 100,000 for the end of each quarter. Beginning cash balance, minimum cash balance, and beginning cash balance. Okay. Beginning cash balance 120,000. Money can be borrowed and repaid in multiple of 100,000. Interest 12% per year. Interest payment are made only for the amount of the principal being repaid. All borrowing take place at the beginning of a quarter, and repayment takes place at the end of a quarter. Half of the sales is cash, another half on credit. 70% are collected in the quarter of sales and 30% are collected in the following quarter. Okay, this one is related to account receivable. The business, half of the business sales are done on cash and another half are on credit. So 70% are collected in the quarter of sales and 30% are collected in the following quarter. Purchases of materials on account, 80% are paid for in the quarter, 30% in the following quarter. last year purchases 500,000. Okay, this one is where purchases of material is related to cash payment and also related to account payable. This business purchase in credit, so it owes money to the supplier. So this one is related to cash payment and also cash account payable. And then budgeted depreciation is 200,000 for the quarter. New equipment, income tax. Okay, let's see cash budget. So if there is a question asks you to prepare a cash budget, you use the format that you have seen. Okay, so this is the format that you have to use. Using the additional informations, okay, you can prepare this budget. Beginning cash balance, there is an amount there, 120,000, and then check the cash collection. You will get the cash available. See the quarter one, 120,000 plus cash collection 1,480,000, and then you will get the total cash available for the quarter is 1.61 million. And then check the total disbursement. Total disbursements means total payments, cash payments made by the business. See, minimum cash balance is 100,000. This is related to the additional information. So, and then total cash needs during the period is equal to 2.197 million. Okay, and then the second half of the budget is like this. Excess of cash, I think the number is 587,000. I think the number is coming from the previous year data. Okay, and then add borrowings. The business has made a borrowing 600,000, and then less interest paid. There is no interest paid in quarter one, no repayment in quarter one. So ending cash balance is 13,000, and then ending cash balance is 13,000, and then plus minimum cash balance of 100,000. So how the business get the ending cash balance 30,000? The ending cash balance is like this. See, the business made a borrowing, in the first half of the cash budget, the business calculate total cash need. You see there in quarter one, the business need 2.197 million dollar. And then during the quarter one, see the second half of the budget, during the quarter one, excess or deficiency of cash is 587,000. Okay, and then the business made a borrowing 600,000. So borrowing 600,000, deficiency of cash is 587,000. So the ending cash balance is 13,000. 600 minus 587, you will get the 13,000. And then you have to add minimum cash balance 100,000. So the ending cash balance, budgeted ending cash balance is 100,000. 13,000. Okay, now this is about the cash disbursement. Okay, this cash disbursement is uh, cash disbursements means cash payment. These are the things that the business expect to pay in the next 4 quarters. So here, let's see, the format is like this. The first item that you have to show is for the material. Remember, in accounting, there are 3 manufacturing costs. So you have to show the cash payment or cash out for material, and then direct labor and the overhead. Okay, the first thing for the material, see the first quarter first. So cash out 523,000 of cash payment, and then cash payment for the prior quarter is 100,000, and then cash disbursement for direct labor 288,000, overhead 408,000. Marketing, R&D, admin, and income. Income tax, the business paid income tax only once a year, and then there is a cash out for equipment, purchase of equipment in quarter 1. So for the cash disbursement, you have to list all the cash out related to the manufacturing cost and also non-manufacturing cost, and other costs like income tax and equipment. Then you will get the total expected cash out every quarter. Okay, this one is schedule of cash receipt. Remember that is you check the additional data. I think you should print this lecture notes. You print this lecture notes, then you can see clearly. This budget is prepared based on the additional data that you have seen in the previous slide. In the additional data, there is an explanation about the the amount of sales made by the business, and how much from the amount is credit sales, how much is from cash sales. So this one, cash receipts is related to sales. When the business sells something, if the sales is made in cash, then the business will receive cash. But if the business do the business or sell in credit, the business will get the cash, but not this accounting period, the next accounting period. In this example, if the business do credit sales in quarter 1, the business will get several percentage of the sales in the same quarter, but I think half of the cash will be paid by the customer in the next quarter. So that's why you see here the first item in the cash receipts schedule is cash sales 700,000 in quarter 1, and then the business will get uh, certain percentage of the sales in quarter 1 will be paid by the customer in quarter 2. Okay, see here, cash sales in quarter 1, 700,000. But when you check the quarter 2 data, under the quarter 2 column, you can see here 210,000 will be collected in quarter 2, and this 210,000 is related to quarter 1 sales. So for you see the quarter 1, the business will get $700,000 cash for the sales in that quarter, and also see the item under that cash sales received on account from sales in quarter 4 2011. So this one is the previous year, supposed to be in the previous year. So in the previous quarter, the business will get cash 300,000 from the previous quarter, and also the business will get cash from the current accounting quarter. So the total here can be seen that total cash receipts is 1.49 million. So that is about the cash payment and cash disbursement. Okay, so this one, balance sheet. You remember in the previous slide, balance sheet is, I think, financial budget number 3. Okay, so this is everybody knows about balance sheet. This is when you want to prepare a balance sheet budget. You have to refer to the actual balance sheet from the previous year. For example, if you want to prepare the balance sheet budget for the year 2020, you have to refer or use actual budget in year 2019. So in this lecture notes, you see here, this is the actual budget from the last year. Okay, you see the number here, and then okay, this is the actual budget. So this is how the business prepared the budgeted balance sheet. The budgeted balance sheet is the format. First thing, you have to list all the assets, and then the next thing is to list the total liabilities and total equity. So when you prepare this section for assets, you have to refer to the cash budget. Remember, in the previous slide we have seen how to prepare the cash budget. So when you prepare the cash budget, at the end of the budget, you can see the total balance of cash. So you take that number and you put the number in this budgeted balance sheet. So here, for example, current asset cash, the ending balance is 1335. This number is coming from the cash budget. And then account receivable, remember you have prepared the cash receipts schedule. Somewhere there you can see the account receivable. Account receivable means the amount that the customer still does not pay. The customers do not pay yet to the business. So, and then material inventory, finished goods inventory. Maybe these numbers are coming from the budget also. Property, plant and equipment, land, building, accumulated depreciation. Okay, and then see here The current liabilities account payable, I think this number is coming from the cash disbursement. When you prepare the cash disbursement schedule, you can calculate how much cash has been paid and how much cash has to be paid in the future. So that is account payable. And then common stock, retained earnings, total liabilities and stockholders equity. Okay, I think I will stop here. Tomorrow I will prepare another video lecture. So do not forget to write your name and material number in the comment section so that you can I will take it as the attendance. This week I will select several questions from the eConnect system, and I will share the question with all of you. I hope you can see the question and try to answer the question. I hope the questions will help you to enhance your understanding about this topic 1, 2, 3, about this topic related to budgeting. Thank you very much.